Markets are continuing to dump, and as promised from last night's, in fact, this morning's video at 5 a.m., I'm doing a bit more of a detailed update into what is actually going to happen in the market, and are we going to see a recovery, or is the rest of the crypto market going to continue crippling down just like the S&P 500? I did a full 1 hour live stream over on the Moo Show channel going into the breaking news in more detail, but this video is going to be a much shorter video covering the important technicals and the important updates from the tariff perspective. So watch until the end. It's going to be informative and keep you posted with the important things that are happening in today's crypto world. And guys, make sure to destroy the like button and subscribe to become a crypto kid. Guys, we're so close to 50,000 subscribers. So if we can reach 50K in the next couple of months, that would mean the absolute world to me. And with that said, let's jump straight into the Bitcoin price analysis and look at what is happening and what we can expect in the upcoming weeks and months to ahead of us. So a couple of interesting things. I think the global liquidity index is going to be the most important indicator and talking point of today's video. But I do want to give a shout out to the death cross that is currently taking place on the daily time frame. We spoke about it in previous videos, and we spoke about how price is attracted to point of convergences, and usually you see a dip and price continuing to the downside after you see that confirmation of a death cross. Now, it's nothing to be so worried about. I mean, the previous times that we've seen it were here between the March and November consolidation. You can see death cross right there. All it does is just a bit of a drop, and we've seen this part of the drop already with price dumping to $74,000 this afternoon. So I think it's just going to signify a continuation of a possible choppy market until the end of this month. And that will coincide with the global liquidity, which we will talk about in a second. So it's nothing to be so scared of. You get these death crosses, but what they usually do in bull markets, which we're still in for Bitcoin, but for global equities, we're not in a bull market anymore. And that is the most interesting point as well. The comparison between global equities and the crypto market. The only issue when you get a death cross is actually in a bear market, in the beginning of a bear market. Right now, we're not in the beginning of a bear market. From a cyclical standpoint, from an overall bullish uptrend standpoint, we are not in a bear market. And that is why it's not a huge concern. And the death cross is only indicating that Bitcoin will likely see a bit of a consolidation at prices we are, at the prices that we're trading at currently. So let's put the global liquidity and see exactly how long this consolidation is going to happen. As you can see, this chart is kind of like magic. This indicator I published. So if you go to indicators on TradingView and search global M2 money supply, you're going to see an indicator posted by moi. So CryptoKit CMT, 82 likes. This is the one. On the daily time frame, you want to go to the settings tab and hit 109 in the time offset for days. This is the most, it's the most incredible and accurate lag between global money supply, so the total money printing, and also the price of Bitcoin. I mean, it's been very accurate, obviously, since the beginning of inception. Risk on assets, which is also a question mark of if Bitcoin is actually a risk on asset, but usually equities do tend to follow global liquidity exactly. I mean, global liquidity is not really liquidity as in how much new money is being printed. It is, but it's just a fancy word for money debasement. The more money there is, the more they're printing, the more less valuable money becomes, and the more it debases. So real estate, Bitcoin, gold, stocks, they will all increase over time forever as long as money printing continues. That's why it's like a bit of a misused name. It's just showing that the US dollar and global currencies are basically going to zero, and hence Bitcoin and the rest of the equity market is going up comparatively. So since the inception of equity, since the inception of Bitcoin, the point that I'm trying to make is that obviously Bitcoin is strongly correlated to how much money and liquidity there is around the world. It's just that in this cycle particularly, I would say from beginning of the ETFs, you can see that January last year you had the ETF launches, and liquidity all-time low was also correlated exactly with Bitcoin's all-time low in 2022. But the correlation became very strong, specifically when the ETFs launched into the market. So here you can see ETFs launch, global liquidity increases, Bitcoin goes up, Bitcoin consolidates. You can see that global liquidity consolidates, liquidity increases, Bitcoin increases, all-time high Bitcoin 109, all-time high global liquidity at that exact daily candle on the 109-day delay. And then since then, you've been on a downtrend for Bitcoin, and you've also been on a downtrend with global liquidity. And what's even like magic-like to me is that you can see a double bottom scenario happening on global liquidity and a double bottom scenario exactly playing on Bitcoin. So I mean, it's just been so accurate so far, and I think this is the strongest point of correlation between these two things since since Bitcoin's inception. That's why I'm paying a lot of attention to it. We obviously spoke about not opening any vigorous long positions on Bitcoin until we see a confirmed breakout on this descending trend line, upward trend line over on the daily time frame, which I haven't done. I've only opened some short-term long positions because of analysis I will share about the short-term time frames in a second. But you can see that we can expect definitely at least like a 1 month to a 3 week chop before we continue breaking to the upside, because global liquidity is increased and Bitcoin will follow that just with a 109-day delay. So from a daily perspective, I think this is an incredible time to be buying. It is an incredible time to be accumulating low leverage long positions on Bitcoin and your favorite cryptocurrencies, including, Ethereum, right? So I'm having Benjamin Cohen on the channel tomorrow, and his prediction for Ethereum going home was basically 1.5, and we exactly came down to 1.5. So buying Ethereum at these levels, buying Solana at these levels, buying Cardano at these levels, Chainlink at $11, AVAX at $17, Shiba Inu at bear market lows, Sui at $2. They're all incredible purchases, and you can do that using the links down in the description below. If you don't have crypto, the best way to buy crypto for the first time is actually on Bybit. So you can sign up, do your KYC, and buy crypto using Apple Pay or your credit card, or do a bank transfer, do P2P, everything works. And you can even apply for a Bybit card to then spend your crypto earnings, which is incredible. So link is down below for Bybit, but if you want to be trading cryptocurrencies on a futures perspective and not just buying for the long term, I would definitely recommend Weeks. They have incredible functionalities, incredible user interface, incredible rewards for just signing up. So the link is down below for Weeks, and it's available globally, regardless of your geographical location. So link is down below for Weeks and for Bybit. So in summary, I'm expecting a chop until the beginning of May, and that will also coincide with the United States actually adding Bitcoin to their strategic reserves, and then we continue to lift off. That is my expectation. Another reason why I think this is a great time to be buying, again, very simple analysis, is the fact that we're retesting the prior resistance of this huge inverse head and shoulders pattern. And if you're unfamiliar with this pattern, we've spoken about it so many times on the Moon Show, so many times on the CryptoKit channel. If you search for an inverse head and shoulders pattern, you're going to see textbook that you do tend to see these retests before continuing further to the upside. And in fact, seeing a retest just validates it. It validates the pattern massively. And the fact that it's also happening on a macro time frame like the weekly time frame is just another incredibly bullish indicator. That's why I would really recommend jumping into low leverage Bitcoin long positions, accumulate as much Bitcoin and cryptocurrencies as much as possible at these prices, because it's super likely that within the next 30 days, Bitcoin is going to be bouncing off from this line of prior resistance, now support, and continuing to new astronomical all-time highs. And in hindsight, it's going to be such an obvious trade, and we're going to regret not taking it. So make sure to do that. I think the upside risk is much greater than the potential low side risk in terms of having exposure to Bitcoin. So if you don't have Bitcoin, or if you're selling your Bitcoin now, the potential upside risk is much greater than the potential downside risk. But obviously, we can't be completely fully bullish on Bitcoin. We need to be a bit realistic and talk about potential downwards targets too. Because it is true, we are seeing global equities do face massive corrections. If you go to the S&P 500, you can see that we've dumped extravagantly, and it is the worst crash, 3-day crash since 1987. It is a huge, it's a pretty important crash, right? You cannot deny that. On the weekly time frame, when I say that the S&P's entered a bear market, but crypto hasn't, this is what I mean. On the weekly time frame, the S&P's actually created a lower low. It's a confirmed lower low on the weekly time frame. This trend has clearly been reversed, whereas Bitcoin is still in that parabolic upwards trend. right? So that's why my argument is that the S&P is actually, it is a risk on market, but Bitcoin is not a risk on asset. It is not a tech stock. Compared to where we were back in December of 2023, the S&P is only up like 2%. But if you go to Bitcoin since December of 2023, you're actually up. So this would be us right around here. So since December of 2023, you're basically up 87%, and gold is up like 30%. So you're exponential gold. You're still an incredible asset to have exposure into and diversify in your portfolio because you're not a risk on asset. Bitcoin is a commodity, doesn't get impacted directly by tariffs. It doesn't import or export goods. It doesn't have employees working for it in other countries where tariffs are going to be a problem. No, Bitcoin is a commodity. That's why it is a great diversifier in your portfolio. The only difference to gold is that it's just better than gold in every single way, shape, or form. So yeah, that's why it's very important to have Bitcoin in your portfolio in the long term and keep accumulating. The issue is I lost my train of thought. So I don't know what I was saying, but I do want to mention that there is a CME gap at 84, actually now $81,500. We did come close to closing it. We didn't close it exactly. I think there's a very high chance that this week we do go back up to 81.8 and do end up closing the CME gap. So just a heads up on that particular note. So there are bearish things. There we go. There are bearish signs, but I just can't tell you enough. The fact that buying Bitcoin now, before I get into the bearishness, is just an incredible deal. Like if you compare to the value of 2021 US dollars to today's US dollars, when you go to the 2021 all-time high when Bitcoin topped out at $69,000, those $69,000 are no longer worth 69. Inflation adjusted, they are worth actually $81,000. So technically, you're like 5% below where we were in 2021. And obviously now we have an administration pro Bitcoin. We have a strategic Bitcoin reserve. We have a Bitcoin ETF. There's so many new developments compared to 2021, but the price is actually lower. See this as buying into a company, right? If a company is doing fundamentally well, why would you miss out on buying it for, a lower price than at a low price than, let's say, for example, Amazon. Okay, 2021, Amazon had 1 million customers, but now they have 10 million customers. Okay, but the price of the stock is lower than where it was in 2021 or in the time when they had 1 million customers. And the reason for this is because of external factors like tariffs, which, of course, in the case of Amazon, do impact them. But let's say that it didn't impact them, which is the case for Bitcoin. From a fundamental perspective, tariffs don't impact the Bitcoin blockchain. It impacts Amazon's business because they're a supply chain and logistic business. But let's say it didn't. Obviously, you would go in and buy Amazon stock now with 10 million users compared to when it was at 1 million users. It just means it's undervalued. So take this as a business investment. Bitcoin is just super undervalued, and it will likely continue going higher after a chop in the next 1 month. And also, watch out for the CME gap. I think likely we will go up and close it fully at 81,000 and at $81,800. So that is something important. But while Bitcoin is actually doing fine, and again, comparatively, if you overlay the stock market to Bitcoin, you will see that Bitcoin is holding up super well. And the crypto market is doing okay too. It's not doing terribly, I wouldn't say. I think we're doing pretty well. The only sign of concern is obviously, apart from Trump and Melania coin, that's going to zero. The only sign of concern is that we are decoupling from the Bitcoin halving cycle. It's okay. It's not so terrible. You can make the argument that we're actually fine. So no, we're not decoupling. I thought we were before this video, but we're actually doing well. So yeah, we're doing well. There's at least another 40% of the bull run left. So there isn't too much to worry about. It's just that the scary thing is that the tariff situation. So Donald Trump just 2 hours ago said that they're going to issue an extra, how much percent? Another 50% additional tariffs on China, additional 50% effective on April the 9th if they don't basically come to an agreement with the United States. So he's negotiating. President Trump is negotiating big time. Like he is pushing hard, and he is notoriously known for that. If you've read his book, The Art of the Deal, you will understand that this is what he likes to do. He likes to push the negotiation to the limits, and he doesn't want to show signs of desperation. Obviously, at this point, any president would be desperate because their stock market is collapsing. But no, he's going all in. He's doubling down because he knows that the rest of the global markets are also sinking with the S&P. The Nikkei is down. The The European markets are down. The Chinese markets are down. So it's not America that's suffering. And he knows this. So he's doubling down. And, China and America can look like tough guys all they want in terms of negotiation. But I feel that China will eventually have to come to some sort of agreement with Trump. And I think they will. So they said that they would be. And I don't know what happened in the last second. So this morning they said they would do 0% tariffs if the US does 0% tariffs, but I think America said they wouldn't be doing that. So now they're proposing 25% tariffs. So European Union is a bit confused. I don't know what's China's response going to be on this, but eventually they're going to come to some sort of conclusion. And in the macro, it's going to help domestic production in America. It's going to help balance the deficits, and it's going to make America's economy steer away from the path of bankruptcy, which it is currently, with $37 trillion of national debt and no way of paying it. So I think it is good in the long term, but obviously short term, it is causing a lot of problems. It's just, if you have cash on the side, it's a great opportunity to be buying. If you're all in already, that is the issue. So if you have cash on the side, then this is a great opportunity for you. This was interesting, so I just wanted to mention it as a final thing. There was a huge pump and dump situation. So around 1 hour ago, there was a rumor that was posted on Reuters and on CNBC News that Trump would be delaying the tariffs by 90 days. And this caused around $4 trillion to be added into the stock market in 20 minutes. But, apparently it was fake news. So then the stock market came down again. It's just interesting how you can see these market manipulations, not only in crypto, but also in massive markets. So guys, that is pretty much it. I know it's been a longer than usual video, but I wanted to do this deep dive explanation. It's not even like a full in-depth analysis. I mean, it's not like Raoul Pal level analysis where we go in and measure the amount of, trade deficits exactly and look at how much that China holds of US equities. And we didn't even go in and talk about Scott Bessent and the Tucker Carlson interview. So there's so much more we can cover, but I'm not sure what you guys want. Do you guys like short, quick, easy to watch and understand analysis, or do you like more sort of complicated stuff? So let me know in the chat what you guys actually enjoy watching. But if you do want something a bit more in detail and in depth, you can go to the Moonshow channel and watch my latest stream. I think we did a bit more detail than we went into on today's video. So with that said, guys, don't worry too much. Everything will be okay. Be optimistic. And with that said, have a great evening, and I'll see you all on the next video tomorrow. So guys, take care. And as always, bye-bye.